let's go over the agenda for what we're going to cover in this video. So my 6-step framework begins with the customer value proposition. How good of a value is this business offering its customers? The second step is unit economics. Of course, it's easy to offer your customers a great value if you're willing to lose money on the bottom line. The third step we'll cover is the total addressable market. What's the upside here? How much room does the company have to grow? The fourth step is competition. How is its competition affecting the company's market opportunity? And of course, with every investment, we have to consider risks. What are the downsides? What are the biggest downsides this company faces at the moment? And finally, valuation and the overall score on my 6-step framework. Nvidia, its customer value proposition looks excellent by the judgment of its revenue growth. Its revenue has increased from $6.9 billion in 2016 all the way up to $165 billion in the most recent trailing 12-month period. What's more, if we break this down into two different parts, pre-ChatGPT and post-ChatGPT, you can see the customer value proposition has accelerated meaningfully since the launch of ChatGPT, with its revenue growing from $27 billion in 2022 up to $165 billion in 2025. And so a gross profit margin absolutely excellent at 69.8%. Two things to note here. Not only is the 69.8% gross profit margin excellent, but it's also improving in the trend line. So right now, the most important market for Nvidia is the data center AI infrastructure market. Now, Nvidia operates inside a few other markets, including gaming and automotive, but its most important market right now in terms of size and in terms of the percentage of revenue that the company is generating. Okay, so Nvidia's primary competition in the GPU space right now is AMD. AMD is the most potent challenger to Nvidia in this category, but it's still arguably at least 1 or 2 steps behind Nvidia. The bigger risk right now is not from the bargaining power from these large hyperscalers, but it's the demand volatility. All right, you've stuck around this long. You truly are a dedicated investor. Let's get to valuation. So I conduct my own proprietary discounted cash flow valuations, which forecast the company's free cash flow out roughly a decade and discount those cash flows back to the present. Click the link below to watch the full video.